Alright guys, so back again for another video on my A plus liquidity trading models. As you can see, we discussed the first model, the inducement liquidity after the second break of structure. Yeah, so I remember I failed to show us more examples on that one. I'm going to just show us a little bit. Now some people will call it cherry picking, but I don't really care. I'm just going to show you guys because I don't want this video to be longer like the previous one. So today we are going to be talking about the inducement liquidity before the first break of structure. That's the second model that I'm going to be dealing with. But before we go into that, let me show you guys the first model, which is the inducement liquidity after the second break of structure. All right, so this is the 4 hours time frame. My last video I was showing you guys on the 15 minutes time frame. Price is fractal. What happens on the higher time frame happens on the lower time frame. You just need to look at it that way. Just at the lower time frame, there's going to be a lot of noise, and the setup might tend to fail more on the lower time frame. That's just how it is. Though it works perfectly well on the lower time frame if it's in line with the higher time frame. So that's just it. Okay, so let me show. Okay, there's one here. Just looking at it, I can just see it. There's one here, and I traded this particular model. I traded it with my guys. I posted it to them and I traded it. I wish I can show you guys that chart. Let me show you. Look at it here now. You can see this sweep of liquidity here, break of structure. You see there's a break of structure here with what? With inducement, with momentum. Sorry, with momentum. Look at our sweep of liquidity. Let me mark it out. Let's look at this. We have this sweep of liquidity. We have a sweep. We have a break of structure here. As you can see, it is probably just one, and there's probably another one. Let me use this. Let me not be wasting my time. This is a sweep of liquidity. This is a break of structure. There's another one here. You get what I'm trying to say? So this is just it. And as you can see, there is something that happened here after this break of structure. Price came back down and gave us another break of structure. You see, after giving us another break of structure, it then created what we have here as our inducement liquidity. You get what I'm trying to say? Inducement liquidity. So if you look at it this particular way, this is now our inducement liquidity, and we'll be waiting for our inducement liquidity to be taken. Now if you look at this particular scenario now, there is no fair value gap here. That's why I said that it is better if you have fair value gap. You get what I'm trying to say? It is better for the fair value gap. It's not a must that there must be fair value gap. Alright, so as you can look at it, this is it, and this is my second break of structure. This is my inducement. This is my target, which is my root 3. Root 3 is that you're going to have a target, and then this is the entry. You can enter based on this order block, or you can just enter based on the liquidity. Since there is no fair value gap, targets here, and then you entered. It's going to give you 1:7.5 before it probably dropped. It didn't really. Did it target? No, it didn't target. But this is where it tagged. But if you are looking at this, you know that yes, there's another. If you've gone through all the model, you know that there's another setup that is here that I called out for my guys. Now if you want to be able to spot this model, then you need to be able to the other model, then you need to watch all the videos. Remember, there are going to be 3 videos explaining each model. This video is going to be explaining the second model, so wait to watch the other videos concerning the other model so you know the setup, the sell setup, how you could have partaken in this sell setup here. But now I'm just showing you the buy, and this is it. This was where the inducement is, but this was where my entry was. My entry was here. As you can see, this is the Quasimodo reversal level. Now if you don't know what the QMR is, you just need to go and search it. I'm not going to be showing that in this particular video. I am going to be making a video for that later. Now let me show you guys other ones that I'm talking about. If you can look at it here, this is probably one, but it's too far. Let me show you guys one. Okay guys, it looks like I'm cherry picking these things for you, but I wanted to believe I should be able to see some here. Okay. So now I've seen one here. As you can see, we have our sweep of liquidity, momentum break of structure downward, another break of structure. What were we expecting? We're expecting price to come back and take out our inducement or internal liquidity. Look at what price did and look at how it dropped afterwards. Okay, now let's look at another one. Is there another one here? I don't want to waste my time going over these guys, so let me just see if I can find another one for the model 1 setup. I'm mostly seeing the ones for the model 2, which let me show you. We have our sweep of liquidity here, inducement. You get now another break of structure that happened. This is another break of structure. After this break of structure, we have another break of structure. Remember the first two break of structure, then there's another break of structure. This is supposed to be your inducement, and then this is supposed to be your level that you want to sell from. Sorry, if you want to sell from. Now you can either decide that you can move your inducement forward since price have not taken your level and broken the structure. That depends on you, but this is your first level of inducement. So okay, now let us just go back to our anything, because our time, there's no time for this. Let us go to our continue the video on our second model. As you can see, the second model was inducement liquidity before the first break of structure. Now I'm going to remove this. Now this is what this is just what I mean here. Let's say price is coming down. So we have then we have a sweep of liquidity. Then before price will take out this high, remember the other one, price in the model 1, price just breaks liquidity, it just breaks structure, multiple structures. But in this particular situation, before price will break the first structure, price will do something like this, fail to take the low, then do something like this. Now in this particular situation, this is the break of structure, and before that we have our sweep of liquidity. So we have our sweep, we have our break of structure here, and we have our sweep. Now before price will break the structure, these multiple structures, price did something like this. Price broke, give us our inducement before breaking structure. Now you will see this happen again and again and again and again in the forex market, as you see. And now this model doesn't just work on the forex market, they work on stocks, they work on cryptos, they work on derived synthetic indices, volatility indices, they work there too. You get what I'm trying to say? So if you learn this model, backtest and practice it, you'll be very good with your trading game is going to change, I promise you. So this is it. This is the second model. Before the break of structure, you have a low, another low that was created. If it is in a bearish scenario, another high will be created before the break of structure. You get? So this is our inducement. In this case now, we are not waiting for another break of structure. We will just consider this as our inducement. You get? And in some situations, you will have your fair value gap below it too. And now remember what I said here, fair value, it's not a must for you to have this inducement, not a must for you to have fair value gap. As you can see, better if a fair value gap, it is better. It's not a must that there must be a fair value gap. So in this situation now, our rule 1 has been fulfilled, and rule 1 and rule 2 are fulfilled, should I say, happened the same time. So these are rule 1, a sweep of liquidity and the momentum push. Then we have a break of structure, but before that break of structure, our rule 2 happened, which is the inducement liquidity. Inducement was created. You get what I'm trying to say? And if after inducement was created, we will be looking for something like this, for price to come, tap into our imbalance, fair value gap, or the middle of the fair value gap, depending on what, and then we'll be targeting 1:3, 1:5, whatever the target is. You get what I'm trying to say? So this is the model for the second. This is the second model. This is the entry, and what will you be expecting here? You'll be expecting price to come, do something like this, and then Well, this is what you'll be expecting, and it is the same way for the bearish scenario. For the bearish scenario, you'll be having something like this. Price will be going up, higher high, higher low, higher high, and then we have something like this. Then before the break of structure, we're going to have something like this. You get? And after this is formed, you know that okay, this is your break of structure. This is your break of structure here. You're expecting price to come back. This is your break of structure. This is your sweep of liquidity. Your sweep is here. Your inducement. Now there must be inducement. If there is no inducement, it is not valid. If you have a sweep of liquidity, you have a strong high or a strong low that forms, and there is no inducement, just know that it is not valid. And then where will you be taking your trade? Let's say there is no fair value gap here. There's no fair value gap here. Where will you be taking your trade? For you not to miss your trade, you just play it from. For you not to miss your trade, you play it from here. Cover the high. You can give it whatever buffer of pips you want, and then this will be your target. This is exactly what I'm going to be trading. This is exactly the second model. So in this particular scenario, what price is going to do? Price will come here, tap you in, take out the inducement liquidity, then drop. Now this is exactly what you want to be focusing on, guys. You can screenshot this if you want and paste it wherever you want to post it, so that you can be looking at it. So this is the second model for my A+ liquidity trading strategy, guys. This is the second model, and this happens a lot. It happens a lot. Let me show you, and let me show you guys a few examples. This is still the 4-hour time frame. Let me show you one. This is one here. Just without doing anything, you can see that this is one here. Now I didn't show you guys this because this was the second model. This is not the first model. This is my sweep of liquidity. And remember, I told you guys, after watching the 3 videos that I'm going to be posting on my channel, you should be able to spot out trades. Now if you learn only the first model and say I want to focus only on the first model, there's no problem. You can focus only on the first model. There is no problem. You get what I'm trying to say. But if you are focusing only on the first model, you won't take trades when the second model happens. You won't take trades when the third model happens. And all these are still the same thing. They are still following the same rules, the same principle. Look at it. They're still following the same rules. The rule 1 has to be fulfilled, which is the sweep of liquidity, a break of structure, and momentum. Rule 2 has to be fulfilled, an inducement, better if there's a fair value gap. And rule 3, you get what I'm trying to say? Rule 3 needs to happen, just that price needs to what? Go in that particular direction to give you a target. If it happens and then there's no target, then the basis of the setup is wrong. Then there's nothing for you to trade there. Okay, let me show you guys. So this is it. We have a sweep of liquidity. We have a break of structure that happened. And before this break of structure happened, what can you see here? What can you see, guys? What can you see? You see, it created the liquidity and inducement liquidity for us. You see, it created an inducement liquidity for us. And what is there? You see, there's a fair value gap that is there. There is a fair value gap that is there. This is my A+ setup. After seeing this happen, now price will probably be around here. After seeing this happen, what am I going to do? I'm going to use my gun box to mark out my fair value gap, and then place my order at the middle or the center of the fair value gap. And this is it. My target is here. This is my target. Now I cover the high a little bit, and then this is it. This is my trade, guys. This is my trade. This is my trade. This is my trade. You see, played out. Now this happens a lot. Remember, I say your strike rate is going to be high if you trade like this. Let me show you if there. Let me check if there's another one. Let me check if there's another one. Now this is going to look like cherry picking to you guys, so I want you to make sure to back test this particular stuff, so you see for yourself the power of these models. You see for yourself that these models actually very powerful. Okay, now let me show you guys. There's one that happened. I took it last week on AUD/USD on the 4-hour time frame. As in, I took the trade and I went to sleep. As in, I didn't bother looking at it. I didn't bother about it at all on AUD/USD. All right, look at it here. Now remember, I told you guys I used to clean up my chart every week. So let me show you guys. It's not really clear here. Let us go to the 1 hour so you see it very clearly. 1 hour so you see it very clearly. Yep, this is it. Or is it clear on the 1 hour? It's not really clear. Look at it here. Let me remove this indicator. Or let us just use a higher time frame. Let's use 3 hours. Yep, it is more clear here. Okay, look at it here now. This is my setup. I need to remove this. Let's just use the 4 hours where the Asian indicator will not show. Or look at it here now. We have our sweep of liquidity. We have our sweep here, and then we have our break of structure that happens here. Look at it. Now, before the break of structure happens, what did you see? It created a liquidity for me. After creating this liquidity here, this inducement liquidity, I was expecting the inducement liquidity to go. You get? I was expecting it to go, and this is my. If you look at it now, there's no fair value gap here. There's no fair value gap here. So looking at this, I would have actually entered from here, from the inducement liquidity, or from this particular level. But this is the level I used. I used this level. Covered the low, and this was my target. You see, this was my target. I had a 1:4.5 risk to reward ratio, and it happened. Let me show you guys. Okay guys, so I had to pull out this chart so that I show you from my journals, so that I'll show you guys. This is the first one. As you can see, I sent it to my I always journal my trades, guys. So this is the AUD/USD. As you can see, this was my entry, this was my inducement. I remember I told you guys I don't really mark my charts out. The reason why you see me marking it out is because I'm making a video. So as you can see, I don't mark the sweep, all those things. I don't mark everything. You don't see the BOS here. So this is it. This was my second model. When I saw this, I placed my entry and I forgot about it. See, it was the next day and all kind of stuff. See, that I think this happened. This got triggered around evening, and then this was when it got triggered. This was when it got triggered. As you can see, it got triggered here, and then I was just posting it to my students, and this is the next day. As you can see, this is a meta trade. This is MT5. As you can see, this is MT5. So that I took this trade with the knowledge of this model, as you can see, and this was my TP, and price went for the take profits, guys. So this is exactly what I'm talking about, and I've shown you the first model in the first video. I've shown you examples of the first model in this video, and now I've shown you the second model, and I've shown you examples of the second model, and even a live trade that I took. I showed you my MetaTrader 4 that I took the trade live. It's not just trading view replay or nonsense like that. No, we don't do that here. I show you that this particular stuff works. So it is left for you now to go back and back test, collect data. If you don't have data, you will second guess yourself. Okay, see you guys in our next video. If this video is helpful to you, please do well to like, share, comment your thoughts.